Welcome to the Keiser Report. I'm Max Keiser. So, Ben Bernanke is all print, no taper. As we said all along, the Fed will never taper. It was a hoax from the way in the very beginning. But then you don't become the greatest hedge fund manager in history without duping other market participants first, so as to execute trades based on market manipulation and trading on inside information. Do you, Stacy?
No, it would appear that the Fed, as you have said many times all along, and many of our guests have actually said, is that the Fed is like a hedge fund, which apparently is something that Warren Buffett agrees with and thinks is a great thing. The Federal Reserve is the greatest hedge fund in history, says Warren Buffett. The 82-year-old, who has led Berkshire Hathaway for more than 4 decades, hailed the Fed's ability to make money from bond purchases as a result of quantitative easing, which in 5 years has more than tripled its balance sheet to more than $3.6 trillion. The Fed is the greatest hedge fund in history, he said.
Yeah, right. So, I mean, okay, it's a $4 trillion hedge fund. So if they want the price of stocks to move up, they go in and they buy stocks. They buy S&P futures. If they want the price of gold to go down, they sell gold. They sell naked futures in the gold market. They work with banks on Wall Street selling futures contracts. They move prices where they want prices to go. So in the case of stocks, they like to move them higher because the Dow Jones, according to Alan Greenspan, another Federal Reserve chairman, saying that everything that they do in policy in Washington is to make the stock market go higher. Forget the fact that a vast majority of Americans don't own stocks, and vast majority of Americans are on food stamps. They're not the majority, but a huge percentage are on food stamps. And since there's nobody in Washington or on Wall Street who has a food stamp hedge fund, if there was, then the value of the food stamps would double and triple their purchasing power. So you'd be getting much more in your food stamp if you had that multi-$100 billion food stamp industry being controlled by a hedge fund manager like Ben Bernanke. But unfortunately, the people on food stamps don't have representation. So it's a hedge fundamentalist, if that's a word, without representation.
Well, actually, I might point out that the day after the Fed announced it would not taper, that it would continue purchasing $85 billion in bonds from Wall Street, giving them free money. The Republicans in Congress voted to cut $40 billion from food stamps. So, you know, the Fed printing is, of course, going to make the price of everything rise, including food. But, you know, just for you out there, I want to show you this definition just from Google of what a hedge fund is, and ask yourself whether or not you want this from a central bank, which is supposed to provide monetary stability and price stability. It's a limited partnership of investors, i.e. the limited partnership being the banks on Wall Street and a few rich guys, that uses high-risk methods, such as investing with borrowed money in hopes of realizing large capital gains.
Right. Well, the Fed is leveraged 50, I think now it's close to 60 to 1. Same thing with Deutsche Bank in Germany. And they have a portfolio of bonds. And those bonds, because the economy in America is not adequate enough to pay the coupon or interest rate on those bonds, the Fed itself has to buy its own bonds, or the Treasury's bonds. And they do this by creating their own money. And they go into this vicious cycle. And you pointed out that while Warren Buffett was saying that, oh, the Federal Reserve is the most successful hedge fund in history, yes, Congress voted to cut back on the food stamp program. So the food stamps for Wall Street, which is quantitative easing, has been kept in place, and I predict, as many have, that the $85 billion a month quantitative easing will be increased. Food stamps were curtailed.
And of course, the hedge fund that is run by the U.S. Federal Reserve has been one of the best performers. The S&P 500, for example, is up 20% this year. So you can kind of say that's the Fed's hedge fund performance. But even Warren Buffett, who's there pushing Ben Bernanke to stay on as Fed chairman, Buffett said that the Fed's eventual exit from its monthly bond buying program will carry unforeseen risks. Quote, "We are in an experiment which hasn't really been tried before," he said, adding that, quote, "buying securities is usually easier than selling securities."
Right. I equate this with swallowing a porcupine.
Yeah.
Okay, when you swallow a porcupine, the quills are facing out and it goes down without a problem. But then try ripping that porcupine out and the quills are now facing in the opposite direction and it rips your entire esophagus apart. And this is the what awaits the chairman when he tries to sell his way out of his predicament. But of course, he'll never, ever sell his way out of his predicament, because before that even becomes an issue, there'll be a global bond crash, which will precipitate a global conference to re-architect the global financial system. And the U.S. dollar, instead of just crashing on the merits of having a psychotic named Ben Bernanke in charge, it'll be crashed because there'll be a new central world government that will reprice the dollar at about 40% cheaper than Asian currencies than they are now.
You know, Warren Buffett is pushing Ben Bernanke to continue as Fed chairman. So I want to turn to this next headline of why Warren Buffett is out there banging the drum for the Fed policy of continued quantitative easing. Druckenmiller, Fed robbing poor to pay rich. The Federal Reserve isn't just inflating markets, but is shifting a massive amount of wealth from the middle class and poor to the rich, according to billionaire hedge fund manager Stanley Druckenmiller. And let's turn to this little clip from CNBC.
As a practitioner in markets, I love this stuff. Okay, this is fantastic. It's fantastic for every rich person. This is the biggest redistribution of wealth from the middle class and the poor to the rich ever. Who owns assets? The rich, the billionaires. You think Warren Buffett hates this stuff? You think I hate this stuff? I had a very good day yesterday, okay?
Right, well, Stanley Druckenmiller, of course, is showing a rare ray of sunshine into this corrupt swamp of Wall Street and CNBC and financial media. And he's pointing out the obvious, that quantitative easing is a wealth transference mechanism. And the people who get this wealth believe that they're the chosen people. They believe that they're God's chosen bankers on earth, that they have some kind of rights above and beyond human rights to be given billions and billions of dollars, because then their activities trickle down to the benefit of the unwashed, those morons out there that they routinely stab in the back. And they have a God complex.
Well, actually, Druckenmiller brings this up, this notion of the trickle down, and he's saying he assumes that the theory coming out from the academics at the Fed is that it's going to trickle down. He said, I mean, maybe this trickle down monetary policy that gives money to billionaires and hopefully we go spend it is going to work. But it hasn't worked for 5 years.
Let me explain what's going on here with a graphic metaphor. It's like the Hoover Dam, or any huge dam. They build up quantitative easing, which is this huge dam, which creates power, hydroelectric power in this case, which is then given to folks like Warren Buffett for free. But everyone who lives downstream from the dam has been deprived of the benefits of that flowing water. They're now done. They're toast. They've been destroyed. So this is creating a financial dam in the flow of what would normally be a flowing economy that has many stakeholders and many beneficiaries. But when you put in an artificial dam like quantitative easing and you give away all the power to people like Warren Buffett, you create what we have now. You've got a few people that have yachts and the have-nots.
Well, he does also mention that earlier, as you saw, that he said that, this artificial wealth effect, like the dam will one day break and it all just evens out and it goes back to where it was, and perhaps even worse, because quite a few villages got wiped out along the way as the water came flowing down. Once you stop the quantitative easing, you're going to have that.
Well, then it's a matter of extortion, and it's a matter of what I call financial terrorism, because he's saying that, look, if you want us to take this dam away that gives Warren Buffett free money every day, then you're going to have to suffer the consequences of a torrent of cash which comes into the system and causes hyperinflation. So they're threatening people out there who are living day-to-day, food, hand-to-mouth, with hyperinflation. They say either give Warren Buffett another $11 billion this year, or we're going to unleash hyperinflation on you, and you won't be able to feed yourself or your family.
Well, I want to look at two little short stories here at the end to compare the situation of what we have with this quantitative easing, and you can see it in the real world in these two analogies here, these metaphors. 22 tons of fake beef seized in China. Now, you mentioned the problem of feeding the population. Well, the beef in this seizure of fake beef was actually made from pork, which is considerably cheaper than beef, that had been treated with chemicals including paraffin wax and industrial salts to make it look like it had come from a cow. So they sold 3,000 pounds of this, and they took the markup. But this is exactly what the Fed is doing with this quantitative easing, is it's creating fake wealth, but they're taking the VIG, they're scooping out the extra profit on selling us fraudulent money, basically. In this case, it's fraudulent meat. In the case of the United States monetary policy, they're selling us fraudulent wealth.
Well, the word in economics is called counterfeiting, and that's exactly what the Fed is engaged with. So whether you're talking about creating counterfeiting beef products or pork products or meat products, the Fed creates counterfeit money through quantitative easing. The money is counterfeited. They counterfeit it into existence, and then they give the counterfeited money to people like Warren Buffett, who then spends it to buy huge stakes and controlling stakes in these huge corporations that were built up over decades by workers and through the assistance of the federal government building the highway system and all the other infrastructure of America. And so then Warren just takes it for himself. He becomes a rentier. He becomes a lord over these income-producing assets that somebody else built. He is the primo parasite of America. And Forbes magazine awarded him this past year with a cover story, #1 parasite in the world, Warren Buffett. And he deserves that title.
And then finally, people are literally getting palm line surgery for better fortunes. Apparently, this story here is that people are getting, in Asia, are actually scratching into their hands. They're getting surgery to create better fortune lines with the hope that somehow that might create a better fortune. And this is as Warren Buffett points out, that this hedge fund experiment that the Fed is doing is truly an experiment. We don't know what it is doing, but we do know it's as absurd as trying to change your fortune, trying to change the fortune of America through etching in this line of take this money, and hopefully it'll trickle down.
Well, this is a trickle-down God complex. That, God is meaningless. You're just going to cut your palm in such a way as to alter your destiny, alter the cosmic reality. I'm just going, what? You know what? Here's a good idea. Cut your head off. Cut your head off, and this way your fortune will improve instantaneously. Okay? Top yourself. Do us all a favor. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to precious metals expert Andrew Maguire. Andrew, welcome back to the Keiser Report.
Yeah, it's great to be here again, Max.
All right, Andrew Maguire, you have news of a JPMorgan whistleblower. Tell us about it.
Well, in fact, two. So basically, I think, I decided to go public about this quite recently. I've known about this for quite some time. But basically, the reason the subject came up is because there's a 5-year window on an investigation, and a lot of people were very concerned about the fact that this whole silver gold investigation would be killed. So that anniversary is this month.
The silver manipulation scandal that was uncovered and prompted an investigation. Absolutely. And so this idea that the statute of limitations might be coming up soon. So then from there, what happens?
Right. So obviously a great deal of frustration. You know that I've been involved with submitting a lot of evidence to the CFTC. I was actually approached, and this is the part that I hadn't discussed. I was approached in, I guess, April of last year by 2 JPMorgan employees, both of whom came to me and said, look, we've got evidence that pretty much backs up the same period of evidence that you appear to have publicly disclosed. And they submitted a formal submission to the CFTC. Now, I know that was done in June 2012. So well over a year ago.
All right, I want to paint a picture here, because on one hand, you've got Warren Buffett, who's saying that the Fed is the greatest hedge fund in history, or the biggest hedge fund in history. He profits mightily from their activities. Their money printing that goes almost directly into his pocket, completely bypassing the real economy, the general economy. Then you've got the LBMA and you've got the CFTC involved in a market manipulation scandal on something called gold and silver, which is the antithesis of paper money. So you've got 2 scandals here. Quantitative easing that makes rich guys fabulously richer, and they contribute nothing to society. They're just paper pushers. They do nothing. Warren adds nothing. Versus people who will work for a living to make something. They want value for their money. They're hard workers. They're savers. They rely on gold and silver to maintain their purchasing power, and those prices are being manipulated, as you pointed out, through your whistleblowing, you went down and you showed the CFTC, by tick by tick when the manipulation was going to happen, how it was going to happen, and it happened exactly as you said it was going to happen, and they're still dragging their feet. Now you've got 2 more whistleblowers coming forward. The stakes here are you represent the interests of everyone who's not, let's say, on the teat of the Federal Reserve System, the Bank of England system, the ne'er-do-wells, the guys, the welfare queens like Warren Buffett. You represent the real people out there, the honest people. Would you agree with that?
Well, absolutely. And, it's very frustrating, Max. You just described it very well. I mean, the Fed is probably, let's just say, the largest hedge fund in the world. There's no more markets. I don't know if it was Chris Powell coined the phrase, there's no more markets, they're just interventions. And what really annoys me is that when you can get actual evidence provided by a firm which is known to be manipulating in other markets, energy markets, other metals markets, and the CFTC, or the regulator, that this is the body that's supposed to be controlling these things, has actual evidence in their control. And a year and several months later, I see nothing, I hear nothing, and it obviously makes one really frustrated. And I have spoken to one of the commissioners, who I believe actually to be a good guy, and a lot of people don't believe this, but I think Bart Chilton, Commissioner Chilton, is actually one of the good guys. And he told me very recently that should the agency, and he's frustrated, he's annoyed, and he said that if nothing is done, or if the agency doesn't come out and talk about anything in this month of September, he will. So,
okay, let me continue, because I've mentioned Bart Chilton on this show in disfavorably, in a negative light. I mean, to me, he seems like a guy, a stalking horse, somebody you put out there to make it appear as though you're doing something, but in fact, at the end of the day, but he's not going to do anything. But in your opinion, you feel as though Bart is sincere and can make a difference.
Yeah, well, I think that if you look at the agency, and I think I do have an insight into the agency, you have various different departments. Obviously, they all have vested interests. The policemen, the guys that wear the policeman hat, these are guys are straight up investigators. They can actually come up with an investigation and they can present that stuff to the commissioners. That's where it falls down, is that a certain amount of commissioners are always voting against any form of transparency, any form of action. And I think the whole reason is that a lot of these interventions are obviously sanctioned by someone very high. And I would obviously say it's got to be the Fed, the Bank of International Settlements.
Well, if Buffett says the Fed is an enormous hedge fund, a multi-trillion-dollar hedge fund, and the beneficiaries of their actions are the folks that are now in the Fortune 400 as having doubled or tripled their wealth in the last 5 years, it's at the same time when austerity is being rolled out, there's clearly a complete bastardization of these markets. Now, since we had you on last, JPMorgan has been fined for rigging energy markets. They've been involved, of course, in the London whale, sued by Fannie Mae for fraud, under investigation for bribery in China. Now, at one point does the penny drop and somebody says, you know what, these guys are serial lawbreakers, and you've got austerity rolled out inappropriately in the face of quantitative easing and Federal Reserve policy that is clearly being manipulated for the benefit of a few rogue, what I call financial terrorists, but guys like Warren Buffett.
At the very point that publicity gets shone upon it. Now, we all know that the LIBOR scandal went on for 15 to 20 years. I think the regulators must have understood that there was an issue there. It was only after the Bollinger e-bail got made public that any kind of charges got laid. And that's the whole point now, is to draw attention on the fact that not only is there evidence in their control, not only is the agency has a discretion not to close any investigation because it's not quote unquote law that they do so, that it would be highly embarrassing for the agency not to actually move forward at this point.
So you're saying there's 2 more whistleblowers that'll keep this alive?
Yes.
That are coming forward. They have come forward. So things are moving forward. Now, I want to talk a little bit about the nature of this market, because your day job, if you will, is you're with basically a timing service for gold, and you're putting out some signals that people can investigate when they can find out more online. But when you are providing this service, you have to play a bit of a meta game. In other words, you don't look at price and supply. You don't look at the fundamentals. You look at basically playing the players, if you will. The players in this case, and I bring this up because the taper talk, in other words, the Fed was going to taper, a lot of smart people, and I know you do a lot of work over there, talk to Eric King at King World News a lot, which I'm also a big fan of. They said it was a hoax from the beginning. There would never be a taper. You can't taper. It would be like Bernie Madoff suddenly saying, "Oh, I'm just going to start returning people's money without committing my Ponzi scheme." This is a Ponzi scheme, and you, of course, and others sorted this out. So, am I correct in saying you have to anticipate the criminality here? You're like a forensics criminologist in order to put out your service, because you have to anticipate their crimes. And the taper was a hoax, correct?
Absolutely a hoax. And here's the key. We can actually watch the footprints. And when a Fed-sanctioned bullion bank takedown occurs, i.e. They come in to move the markets at very quiet times of day, much like 400 tons might get sold off in the paper markets in April. Very recently, talking about taper, as recently as last week, all of a sudden, the day after the COT cutoff, the reporting cutoff for the exchange, of course, the price dumps in the early morning markets. 1 o'clock in the morning, 2 o'clock in the morning. Who's around at that time of day? Very, very thin liquidity. Those kind of footprints are so obvious because the regulators can pull that ticket very quickly and say, hold on a minute, who the hell would dump that many contracts at this time of day at a certain support level that is commonly watched? Well, who would do that? And obviously, they do it with impunity. So it must be the Fed. It leads right back to a Fed-backed move. And of course, so what they do is they drop that. Now, they already know. The banks are obviously trading on inside information at this point. They know there's going to be no taper. It's not a surprise to these guys. They're told to take the market down. So at the same time, no wonder they're getting long on the futures market, because they already know that they can actually draw in a lot of short supply. They can actually bring in synthetic supply. They can actually force out a lot of long holders. And lo and behold, talk about footprints, 30 minutes, well, 1 hour before there's no taper announcement, suddenly the price of gold jumps up $15. Well, who the hell is making those kind of plays before a big announcement? Nobody.
Right, let's look at this trade a little bit more, because the economy is stagnant, if not contracting.
Yeah.
The idea of tapering or rolling back on the quantitative easing, the free money printing, is ludicrous. Gold is obviously sensitive to paper money or currency debasement. And as currency is debased, it would trade higher. Without that artificial dump of gold pre-taper news, gold would have probably jumped to over $2,000 an ounce, based on this idea that the Fed is completely out of its depth. It has no ability to rein in their massive hedge fund skullduggery. And of course, if gold gets above to a new all-time high, then the entire mindset of the world's traders and economy is that, oh my God, they really are out of control. We need to buy gold, and then the entire facade cracks. And this is why it's important to keep the price of gold down, correct?
Absolutely correct. And below certain technical levels that will automatically draw in both physical and technical buying. So it's all a game.
And just to cut in, technical buying being that more or less computers are programmed to buy and sell at certain price levels. In the case of gold, there's an important level at 1,400. So at that 1,400 level, that if it starts to get above that level currently, computers driven by money financed by the Fed, which their cost of money is zero, and their ability to sell short naked contracts, that is counterfeiting contracts, is infinite. They just jump in and dump the price. Correct?
Absolutely. The downside of this for them is that I say the COMEX is the tail that wags the much larger spot market dog, which is the LBMA market. When you discount through synthetic supply through the paper markets, you're ending up, it's almost alchemy at its best, because you end up with a price that someone can actually convert that paper price into physical in London. So what's happened is, as a result of defending the dollar, you go short gold, you're going long the dollar. That's why the Fed do it. I mean, so in other words...
it's reverse alchemy. Because with alchemy, you're turning lead into gold. Here you're turning gold into worthless paper. It's reverse alchemy.
Reverse. And
right. And who suffers? The people who are suffering austerity, the people who are rioting in Greece, the people who are on food stamps, the people who are on economic duress, the people who are, being slammed by Warren Buffett. They're the victims in this. There's not a victimless crime, correct?
It's not a victimless crime. And on the other side of the fence, you've got someone like Asia, most of the Eastern central banks, saying, thank you very much, we can rely on the Fed to do our work for us, and we will pick up that physical. So, You're right, except that the inverse of that is is turning into allocated physical, which is being drawn down and moving from west to east.
So if you're in the East, it is alchemy, because you're able to swap your Asian currencies for real stuff at an artificially cheap price.
Yeah, and we're opposite Traitor's Gate, and look at how appropriate that is. I mean, that is traitorous moves.
Yeah, I just saw George Osborne's head roll out the back. Oh, I'm sorry, that was a log. I got that mixed up. All right. Anyway, we were out of time. Andrew Maguire, thanks again for being on the Keiser Report.
Max, it's always a pleasure.
All right. And that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. And I'd like to thank our guest, Andrew Maguire. If you'd like to get in touch, tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.